Hansen here, Gold Star Financial. Just want to do a quick video here on what's happening with the housing market. I've been getting a lot of questions from both referral partners as well as clients, sensing a little uncertainty where the housing market might be going in the future. So I just wanted to address it here in a quick video. Obviously, I don't have a crystal ball, so we don't know what exactly is going to happen. But what I do have is some past knowledge and some past details of past recessions that we might be able to help predict where we're going to go here in the future. So I'd like to kind of go over that with you now. If you look over the last 50 years, housing appreciation has been relatively steady. We've had some dips and we've had some mountains here and some valleys and whatnot, but over time, we've been seeing a pretty steady increase in appreciation in home values over the last 50 years. And that even includes throughout the different recessions that we have come across. And I think everybody really starts to think about the last recession where we just saw home values just absolutely plummet here, and that kind of sticks out in everybody's mind, and that's kind of where it's bringing in some of the fear of what might happen here in the future. So I want to go over that based on the last recessions that we see. Like 1975, you see home values pretty much flatline, and then as soon as they come out of the recession, go up. The 1980 recession here, we pretty much flatline coming all the way out into the early 80s, and then as soon as we come out, home values steadily increase again. 1990, we did see a little bit of a dip that was prolonged here and flatlined, and then as soon as things started to level out, home values again increased. In 2000, we never really stopped increasing, and it just kept going right up until the Great Recession there. And one thing that is key to point out, that every recession really has some sort of economic catalyst that drives us into recession. 75, 1990 were both led by increases in oil, 2000 the tech bubble, and then unfortunately the last Great Recession here was the housing market in and of itself, and that's why you see that tremendous crash in home values. But if you see, it didn't take very long after the recession to start to rebound and go up pretty steadily, where we actually not only got all the value back that we had before the recession, but we actually increased past that. So I think it's a good indicator that home values and appreciation are going to stabilize over time. We might see a little bit of flatline or a little bit of dip with this, but overall the housing market has been really strong and in a really good position. In fact, February's numbers came out on foreclosures, and it was only 0.04%, so 1 out of 400 that were actually in foreclosure. Those are all-time lows. So heading into anything that might happen from a recession standpoint, the housing market is in a really, really strong position, which is a good thing for the future there. So what I want to do is take a look at appreciation. You know, if we were to buy a house today, where are we going to be over time? So say we're going to buy a $200,000 house today. We only put 5% down, so we're only putting 10% down. We're going to take a look at closing costs. We're not going to include prepays and escrows, because once you do sell the property, you're going to get those back. The escrow account is yours and will get refunded, so that doesn't go to the cost of the home itself, but we will include all third-party costs, so say about $2,500 for title work, appraisals, things of that nature. And if we're looking at kind of a shorter time, over a 5-year period, we can see where stuff stands. But I want to make it specific to our area, so I'm going to pull out Michigan here. Say we'll look in Clayton County in Michigan, and we can see appreciation historically has been about 4.4% for Clinton County. We're predicting that to be forecasted a little bit lower because we've actually factored in the jobless claims that are going and where we think those might kind of stabilize if we do have a recession. So we are predicting a little bit lower forecast. So it's being averaged out over a 5-year period, because we don't think we're going to sit in a recession for 5 years based on past economic indicators. But if we do look and stretch that out to 10 years, which is about the average time that people are in a home, we can see that forecasted appreciation has actually increased to a little over 4% because it's being averaged out over that 10-year period. So if we calculate these numbers, we can kind of see where we're going to be. If you bought a house today for $200,000, even with the conservative forecast on on appreciation. In 10 years, the home's going to be worth $296,000. So that doesn't include you paying stuff down. That's just the gain in value over time and what that house is going to be worth. It's almost $100,000 more. If we take a look at the total cost that we were able to get, if we factored in the $2,500 in closing costs, we start out here in the negative for that first year. Even after a 10-year period, we're still netting over $93,000. And again, that doesn't include any principal and stuff that's been paid down with the mortgage itself. What's kind of neat is to take a look at the return on investment. So obviously we're not counting the closing costs because those are already factored into our investment itself, but we are counting the down payment. So putting just $10,000 down on a $200,000 house, we see an increase of about $9,600 a year every single year we're in the house. So we're almost 100% return on investments. We can definitely see that we're in a pretty good position for the long term if we're going to buy and invest in a house. And honestly, the best way to help build wealth in America is to own a home. You see, that average is pretty steady. Even with these peaks and valleys and such, it's pretty steady at 5% appreciation. So if you have any questions, feel free to reach out to me. It's John Hansen, Gold Star Financial, with your Mortgage Minute.